Okay, everyone, thank you for coming back with your drinks and coffees and things, which definitely helps things through the morning. This is our first panel discussion here on Stage 1 here at FinTech LIVE London 2024. This is FinTech Strategies, sponsored by Smart Communication. So let me welcome our panel. First of all, closest to me, we have Luke O'Leary, Head of Legal at Conto. We have Tamara M. Zajkowski, Chief Digital Officer at Acrisure. We have Valathor Gunnarsson, CEO at Tactical, and Chris Rigby, Co-founder and Chief Financial Officer at Sten. A warm welcome to our panel, please. Now, one thing I love about these panels is you bring together a group of speakers all from often quite different backgrounds, different perspectives, and yet you start with the most broad possible question, which gives a lovely way into things. So we're going to look at some trends to start with, and the key trends that are shaping fintech and fintech strategies today. Luke, as you are closest to me, apologies, I will start with you. For you, what are those key trends?
Thanks for... Thanks for warning me in advance you were going to start with me.
It's a pleasure.
So I guess thinking about the key trends that we see in our business at the moment is I'd focus on three different topics, which I'll cover briefly and then let others jump in as they want to. Embedded finance is the first one. We've had a world in which we've had integrated finance for a very long time where people can connect different tools via API, centralized into one account. Over the last few years, we've seen more and more the industry going towards a more embedded experience where your products are embedded in the product of someone else, which has obvious benefits because as a user, if everything is centralized in one place and you can do everything in one place, that's more attractive. The value proposition you offer to your clients is that much more attractive. This is one of the areas in which what will become a recurring theme, I think, of my inputs today. A thoughtful and well-structured legal approach is essential to the value proposition of the product that you offer your users. There are a number of different ways to do embedded finance. There's no one-size-fits-all, but without that well-thought-out legal structure, you can't really start offering the product that you're trying to sell to your users. The other is regulation, and I mentioned that not just because we live in a world, particularly in Europe, where we're in an increasingly sort of cumbersome regulatory environment, and we need to try and work out as a room, as a group of people, how to navigate within that and build clarity in our business within that framework, but also because as a fintech, your fintech strategy is intimately linked to the license that you hold, and the choices you make in terms of the regulatory license you have enormous knock-on consequences for the rest of your business, whether that be where you're going to grow, whether you're going to do M&A, what products you're going to sell to your users, and without a sort of savvy and well-involved legal team helping direct that, you won't know sort of which direction you're heading in. The other one is Gen AI, but I'm going to pause because I'm sure other people have things to add.
I just build on that. I mean, I think for us and Acrisure perspective is just a fintech concentrated specifically in insurance. So our drive and focus, I would say, from a product development perspective, is certainly on kind of agents efficiency, and our key utility for that is Gen AI in many ways. And so I think from a regulatory perspective, we're pushing, you're pulling. We're trying to push the envelope to kind of evolve and drive the industry in an innovative and creative way, but knowing that it's an immature product and there's opportunities where we've got to figure out essentially how to manage it, so be able to kind of evolve on the topic and the capabilities, but also making sure we're managing it in such a way that it's not going to put us at risk, and being thoughtful about the way we implement it is, I think, the big area for us.
Yeah, I think there's obviously huge trends at the moment, AI being at the top of the list. But at the same time, I think it's really, really important that we don't forget about what it's all about. We have to focus on what it's all about. It's all about lowering risk and increasing efficiency, process design. These are all things that we need to keep focus on. We need to be aware of the trends, but we need to not forget to maintain focus on our key elements of the business. That's my take on that.
I think the points about embedded finance, generative AI, they're self-evident, and they certainly resonate in our business. I think the area that has changed markedly in the last 2 years is we're all thinking about designing product, lowering risk, improving efficiency. But in the capital markets, the old traditional things about cash generation, unit economics and profitability are, I think, in more relief now than they were certainly in pre-22. And that provide, if you think about designing a fintech strategy, there's obviously investment for the future, building the future, disrupting what's already there, but at the same time paying for it is more of a challenge, I think, now than it was a couple of years ago.
Mm-hmm.
Now, there's a couple of questions on technology I want to get into, and Luke, you touched on it very briefly, and I thought let's lance this one early. Let's do the AI question early on, and try not to spend the entire panel on it because it can very rapidly turn into one big AI discussion. I open this up tomorrow. If I can start with you on this one, how big a role do you see AI playing now, and how is that going to change in the near future?
So I think, like any new technology, and I say new in that it's not new, but it is in terms of the mass utility of it, it has a significant impact as it relates to disruptive hearts and minds, meaning people's focus is significantly on the implementation, the utility of it, and there's lots of new fintechs being developed and created in order to leverage some of those capabilities at a faster pace. But I would say generally, it's a massive impact to the industry. How we adopt it and how it's utilized is still a question. I think we've seen it in other disruptions historically. So the expectation is usually particularly higher than the outcome early on, mainly because there are customers who have different preferences, different products in terms of dynamics and the utility of it. Meaning more commoditized products are easier to kind of evolve in it and automate and create some sort of sophistication around it versus less. And so I think you see the dynamics of that play out with any implementation of technology. I don't think this is unique. And I think particularly with the evolution, if you look at the financial services industry as a whole, we started out in having the most structured data across all industries. And so if AI is, in essence, an ability to create transparency around the utility of your data because you're modeling a bunch of things, you're seeing it how it works, and validating essentially those outputs. It helps you identify if there are gaps or changes that you need to evolve in terms of either the capture of that information or the way in which you structure it. And I think that is an evolution that will take some time because we haven't used data in the way that we're looking to use it in the future. Or currently as we want to in the future. So I think that there's, to summarize, I think there's a lot of opportunity. I think there's a lot of excitement around it, but I also think there's an element of kind of risk and concern. And so I think the element of figuring out what you want to use it for, how you want to use it, and the experimentation and the validation of that utility is far more important to the exercise and process than necessarily where you're going to plug it in each one of these areas of opportunity.
I'll open it up to the rest of the panel. AI, and as Tamara was saying, how do you plug that into your wider strategy?
Yeah, I think it's really important to realize that the old, classic principle still applies. Like, what problems are we trying to solve here? Like, you're designing a service, you're designing a product, or you're enhancing it. So keep focus on what problems are we trying to solve here. And when talking about AI, there are so many shiny objects out there, and this is always in the news. So we need to realize, how do we apply AI in regulated sectors versus like the creative industry? Those are totally different use cases. We need to maintain the data structured. We need to maintain the right data integrated and make it actionable. There's often not a lot of room for interpretation. This needs to be implemented in the right way. Otherwise, we run the risk of not being in line with regulations, or even worse, like creating yet another data silo. We have the data is all. We need to keep the data unified, structured, actionable, and in line with our processes. So, product principles still apply. What problems are we trying to solve? How are we improving things? So do your own product design or process design, and then decide when AI is helpful and when it's maybe derailing your focus.
I think it's also important to be clear on what AI means in your particular context. So, for those of us that are old enough, decision science and machine learning, it's computational statistics. It's been around for a while, but the refinement of that using better data quality and large data sets, big data, that clearly is transformational, and that's where I think generally business is going to get a productivity pickup. But in our specific context, or certainly in our firm, we focus on business to business as opposed to consumer. So actually your data sets are not that, the law of large numbers doesn't necessarily apply. So I think it's important to be clear on what the limitations are. Productivity gains, absolutely, in terms of way regular folks work, but not necessarily better decisioning, or at least I can think of other technologies in the short run where there might be, more near-term pickups. But clearly, it's an area that you can't afford not to have a strategy and be addressing the issue.
Yeah, I mean, it's very exciting, that we can now draw these conclusions in user behaviors, what users want, etc. But the challenge, obviously, is, as people have alluded to, putting in place the framework to test and learn and use that as much as possible, but within the boundaries and safeguards that allow for protection of customer data and for confidentiality, which are obviously justifiable concerns everyone has around the use of generative AI. I mean, for people who haven't yet put in place some kind of governance structure in their organization, I would strongly recommend that you do that. Obviously, the bigger your company, the harder it is to put in place, or the harder it is to get stakeholder alignment. I'd actually be interested to know your view on that, or how you've navigated that. But for us, as a 1,500-person company, there's still a lot of stakeholder alignment, but we're in a different ballpark, I think, than that crucial.
So typically, I would say, like a very high level, it's all of our testing is on internal. So everything we create, we're focused on agent efficiency. So our agents are selling insurance to customers, and it's a blended kind of digital strategy where there's interaction digitally, and then there's like basically a human at the other end. And so the evolution of that is basically based off of product complexity and based off of profile of the customer. Some people don't want to interact with humans, and some people do. And so you have to kind of like gauge that effectively. But the way in which we think about the implementation of AI or any new technology relevantly is internally. So everything we create is an internal development. They're leveraging it, the agents themselves, and then we turn it to customer facing. So that's been our kind of a key theme and strategy.
Staying with technology, I want to flip things on their head a little bit here. Valo, you've been saying on a couple of your answers about remembering the basics, keeping doing the things that need to be done and not forgetting them, not being distracted by the shiny new toy. For you, what things are being underused? What technologies aren't being talked about enough at the moment for you? And then I'll spread that to the rest of the panel. Yeah,
so my background is I've been both head of digital channels within a bank and then doing a technology startup. And it's interesting to see the challenges of both sides of the table. And I feel that today when companies are often well ahead in their digitalization journeys, digitizing their processes and improving, there's still a lot to do, and you're surprised, when you look behind the scenes, that there are some common problems that, because when you've been adding so much new technology and you've been improving, you often haven't had the time to, for example, creating a really end-to-end automated process, for example, which is, often the key to efficiency, which we talked about before. So introducing a lot of new systems, but unifying the data, the orchestration of all of this is often still a challenge, and which results in the process being partially automated, partially digitized, and then there's a lot of manual work at the other end of the table in the back office, which will delay everything by 3 to 5 days, typically, or even more. So there's still a lot a lot of opportunities there in terms of increasing efficiency with automation. So, keeping focus on that, and coming back to the principles, whether you're designing a new product or service, spend at least half of your time empathizing with the user, the customer, really understand the problem, the journey, before jumping into the technology and design and implementing it. That is really key to being the best in your industry. Emphasize spending time with your customer, with the problem, and really understand it before jumping into the technology.
Spoken like a true product guy, absolutely. I'll open it up to the rest of the panel about sort of underused tech, I suppose. Which areas need to get more attention? I'll open it up to whoever wants to take that on next.
I suppose the two areas that we see in our business, we're very much in a business-to-business context. Things is really basic. International trade finance is super paper-based still. So the great hope is that blockchain and DeFi technologies digitize everything. But there's adoption risk with that. It's going to take a while. And it needs the legal infrastructure to move at the same speed as the technological adoption. What we see in the short run is how can we address problems for our clients that are paper-based, but how can we make that scalable and digitized in the meantime? And so really quite known technologies or things that could be refined a lot better, I think, are things like OCR. It is a compromise to the degree that you're not solving the ultimate problem, maybe in the way that DeFi or tokenized infrastructure will, but the problem's going to be around for a while, and you've got to do that in a way that doesn't involve a very manualized process. So OCR would definitely be one. The other area, as I look across to learnings from consumer experience and best practice in fintech, there is biometrics. That in business to business land is virtually non-existent. And I think if you're dealing with SMEs, if you're dealing with sole traders, the transplantability there of that kind of learning from consumer finance techniques into SME is very latent, sort of fertile territory. But I think those are very investable technologies right now, but still don't seem to be hugely widely adopted in the industry.
I was going to mention Gen AI, but we've covered that a little bit already.
You can mention it twice, I'll allow you.
I mean, for us in our business, the use of Gen AI and how we're going to use it internally to become more efficient and externally to address users' concerns is obviously the most underutilized at the moment, because we're so early in the process of discovering what it can do and how we can use it properly. But I actually had a question for Chris.
Go for it. I have no monopoly on questions. Feel free.
About you mentioning the paper-based trade finance and whether you're using technologies to address fraud risk in that. And we were talking about before the panel about this, but
yeah, absolutely. I think it's a critical feature in our business. We think of our company as a risk management company first, and being able to assess fraud, compliance, and credit risks digitally and scalably in 70 odd countries that's the problem we've set ourselves. So you can't do that through paper and through old school techniques on people checking. So that's all algorithmic. We've had to our biggest decisions have been build versus buy. So when we look at technologies available in the market and think where can we add value, it's not on generic OCR technology, but on its application to our context and our verticals. That's where we try and focus, and that's where we spend a lot of our development dollars. But I think fraud, it's certainly in our business, is probably the single biggest differentiator, and it absolutely requires an algorithmic approach.
Thank you, Chris. Tamara, if we can just come to you quickly on the underused areas of technology before we move on to other areas.
Yeah, I'll just build on Val's point. For us, it's very similar. I think you see a couple of trends as your consolidation of financial services companies as a whole. So you have companies coming together with various different technologies, and getting those consistent platforms it's a exhausting long journey. And I think that the people, get tired, and so you get high concentration early on, and as you kind of trail out, it's hard. Those kind of more challenging pieces become more difficult. And so I think there's elements of the consolidation of the market that's driven more desire to create consistency and streamlining the back end, because we're so focused on AI and the front end and how we can interact with customers. But if they're interacting with agents who have to, log into 8 different systems in order to get a task done, it's not going to make it efficient on there. And so there's a lot of work in the back end to ensure that there is consistency, and we're driving those elements as well. So I think the automation piece is certainly one of those that's kind of continued to be a focus, but underutilized, mainly because it's not as fun, but it is real. And I think that there's elements across the board that you can kind of see those inefficiencies. And so I would kind of double down on that point.
Well, I'm going to continue with one point you've just made there, Tamara, and it has come up a couple of times about the importance of customers. But I want to extend that, moving into the understanding of customers. And Chris, this is something you've mentioned in several of your answers about the importance of customers. For you, how can fintechs really understand and meet customer needs in such a fast-changing market, and making sure that's a key part of a strategy?
I'll start by saying how I've learnt we shouldn't do it. And that, I think that the gut instinct of a founder or an executive management team, I've seen this. I spoke to a client in 1973, and this is the problem. It's got to be data-driven. So we've developed an approach very much on testing. You can develop early hypotheses on this is the friction in the problem we're trying to solve. This is how technology will address it. But nobody really knows until you test. And I think that the trick, or the most successful platforms I've seen, are where you can test at low cost and very high frequency, and you get a very quick feedback loop between your test and the hypothesis to take it to the next level. But the possibility of falling into the trap of anecdote, or I've seen this is the bomb, this is what's going to change the customer experience. In my experience, it rarely works. And I think designing your tests is the really important thing, because large enough populations, samples, there's no getting away really from the science behind conducting an experiment. So I think the best firms I've seen do that very, very well, and do it culturally. And where we've had the most impact with our customers is where you listen, you survey, you can do qualitative things as well as quantitative. But running good A/B tests on things, I think, is a really, really powerful way of listening to customers and acting on it.
Yeah, I could almost feel the knowing smiles and the sage nods coming from the room when the I spoke to a customer in 1973 example came out there. We've all been there. If we keep that question going about understanding those customers. Luke, I'll come to you next on that. How do you incorporate that into a strategy?
I think, without wanting to sound trite, it's just speak to them. We're at a...
Sounds far too simple.
we're at a stage of our business, so we offer B2B business accounts to SMEs and freelancers, and we're a traditional VC-backed company, and very, very customer-oriented. And the only way, for me, you can really understand your customer properly is to talk to as many of them as possible. And of course, look at the data, but the data will be informed by what they're asking for and what they're saying they need.
Yeah, and just to kind of build on multiple points here, I would say similarly, like we run everything like an experiment. It's a scientific, it's literally called a lab at Acrisure, and the intent is to ensure that we drive that culture but discipline of leveraging data. We have a large data science team that builds out and manages all of the inputs that come in, but it's continuing to ensure that you have feedback loops essentially in your deployment strategy. So if you're releasing new technology or you're releasing new functionality, it's important to know that if it's working or not. And so, yes, proactively we try to accumulate as much information to ensure that we're going down the right direction, but I think there's kind of the post-launch activity that also occurs. It's ensuring that feedback's coming in so you can pivot effectively, because just because you've launched it and it seems to be running fine, it doesn't mean that long-term it's going to be. And also as you compound it with other additional features and functionality, it may change its value from a customer's perspective, and you just have to make sure that you're staying on top of those pieces.
I love the topic. I think it's a lot about culture and how you what kind of people you hire in also. For example, in my company, we very much focus on hiring people with a learning mindset. You know, they may be experts, but they have to have this learning mindset, which we then apply when we have new features or product design. We have to realize there will be waste, there will be, you know, some mistakes, but our job is to reduce the waste. So, for example, I'll give you an example. We run small workshops with looking at the process as is, you know, pinpointing the bottleneck problems, and then, you know, as it should be. Then we make a high fidelity prototype, which is cheap to do. A designer can do that in a couple of days. We test that on the prospect or customer, and thereby you can cheaply validate if this is the right way to go or not. And we have often saved a lot of money and resources by doing this early on instead of doing the programming and implementing it. And we have also made the mistakes of, when skipping it, you know, wasted months in doing something that, you know, essentially wasn't what the customer asked for. So, and as you mentioned, you know, A/B testing is also good, but remember, in qualitative testing scenarios where you have the customer, the end user, you only need like 5 or 6, 7, you know, persons to identify 85% of the problems. So it's fast, it's easy, it's cheap. So and thereby you can reduce waste, and that's what it's all about.
Well, my next question was going to be about how important it is to have that development mindset, to be experimental and not being afraid to do that. And you've kind of already answered that question already, so thank you for that. I'll develop that a step further, and Tamara, I'll start with you if I can. Everyone wants to be in that kind of culture in a fintech where they are able to experiment. They're allowed to fail sometimes. Yeah. They're allowed to get things wrong. What would be your advice to help develop that culture, to make sure you're in an environment where you can learn, where you can try things out without it feeling like the end of the world if it didn't quite work as planned? How do you develop that kind of culture?
There's layers of dynamics here. So I think the size of the company matters, so how big you are and in what industry you're in. So obviously we're predominantly in financial services, so it's a risk-adverse industry. So your core competency is to be risk-adverse. So what is hard is to be innovative, because that's in conflict with that. So what we have done is we physically locate our innovation team independently from our core team. There's challenges with that too, but we'll go into that later. But basically, they are run independently out of Austin, Texas, and Boston, Massachusetts, and San Diego, actually, as well. The intention with that is to allow them the freedom to think more creatively and beyond just a typical boundary of specifically insurance. And so the intention is to kind of create that culture and opportunity there. We hire and are very specific about who we hire, knowing that we want that mindset, that growth mindset that previously mentioned, and that is the intention, and the team kind of maintains the consistency and culture because they all value it significantly, and then we also allow people to fail. I think that's the most important thing, is it's controlled in terms of the outcome and the experimentation, so there's a lot of thought that goes into what we're going to do and how we're going to do it, knowing that we may fail in some areas, and that's fine. We just need to have it controlled and monitored, basically. And so there's a lot of elements that are related to those pieces being ensured and maintained. But the big thing is also making sure that that technology can then be leveraged by the core company, and it's creating those connectivity points that's really critical, because in a silo, engineers can create really cool things that no one uses, and that is wonderful, except for the fact that, you know, it's a total ROI flop. And so what we want to ensure is that there is those connective points. So we do have, we build that in essentially to our cadence of connectivity with not only the customer but our agents, ensuring that the whole process is connected in various different touch points throughout the deployment of new technology. And then, again, those feedback loops help ensure that the expected outcome is realized, basically.
I do appreciate how brutal that was, starting with you on that question. It's a very risk-averse area, and how do you encourage development whilst staying risk-averse? So apologies for that. I'll open it up to the rest of the panel about how you develop that culture of experimentation and development. Whoever wants to run with that next.
I agree. The challenge is here, we are in a sector that is defined by risk and regulations, and those are non-negotiable. So how do you stay creative and innovative in that kind of environment? So I think the key here, and I'm building on top of my product background, is separating those two. So you start with an innovative process that is sort of a structured brainstorm. So you allow yourself to think out of the box, behind the box, whatever. And the key here is not to stop at limitations of technology, because one iteration of an idea might lead to another one, which would be the right one. So the key here is to work with open-ended questions like what if and those kind of things, so built on top of things. What I often see happen is when you have, let's say, an engineer in the room, they will instantly think about limitations, and technology doesn't allow that. This is too risky. So have a structured format, for example, as design sprints or mini versions of that, and then have a separate process where you refine it, where you take on risk and regulations. But you have to let an idea evolve by itself before you start cutting off and shaping it according to how it will be implemented. So separating those two processes, the creative innovative process and the refinement contracting process, is important.
I certainly agree that if you're going to give people the license to reimagine and genuinely disrupt a process, then you can't be apportioning blame when there's learning or there's a series of missteps. And as someone that's a reformed banker, I very much are familiar with a culture where if things were going wrong or there was waste, it would be very much establish accountability first, and then we'll fix the problem second. I think one of the nice things about being in earlier stage firms where there is creative freedom to learn and to experiment is that the discussion is more framed in the way, let's learn once, not multiple times on the same thing. But it's absolutely okay to learn and have a failed experiment, because that's the point. We're trying to disrupt things that are capable of being refined. We don't quite know how we're going to address the problem, but the cultural freedom to do it, I think, is really, really important.
Yeah, building on that, I totally agree. And at Conto, it's almost expected that we will do things differently. We're trying to disrupt or transform a traditionally very conservative industry, as Tamara was saying. So having that expectation from the get-go, and then choosing the right people that have that mentality, the can-do attitude that will say to themselves, not, I'm not sure I can do this, but will say, okay, this is what we have to do, how can we do it? Building within the regulatory frameworks that obviously exist. And then also you can try and address it. We have regulation coming out all the time that often is not sort of super well thought through when it first comes out, and so we can address at either an EU or a national legislature level through public affairs teams to try and give that clarity to enable us to build within the frameworks that obviously need to exist.
Regulation not being thought through properly. What a scandalous accusation. Right, let's go to the room, see if there's any questions. I know I've got one I would like to finish on, but do we have any hands in the room immediately? Yes, we do.
Hi, thank you for such an interesting discussion. Nafisa Fini from Paint. The question is, you mentioned about generative AI and AI in general. How do you think fintech companies in UK are ready for EU AI Act, or like your companies are ready, and what will be the impact on that or challenges? Thank you.
Whoever wishes to take that first.
We're not a UK-based company, so
We have an office?
I could go first, though, if no one
I'll
else
take
wants
the
to.
fifth on this one. I have nothing to say.
Yeah, I would say AI in general, in terms of the distribution of innovation, there's significant, obviously, innovation hubs that exist in the US. We tend to create things not knowing the outcome, and then you guys regulate, and we assume those regulations. So I think it's the combination of those two worlds that will come together over the next few years. We're seeing it, ours states do it, so it's state-regulated kind of regulation. So we've seen it in Colorado. California is coming out with some as well around AI. So it'll be implemented across the board, depending on basically the use case and the implementation of that. And so I think we'll see significantly across the globe it being implemented fairly quickly over the next few years.
Okay. Any further questions from the room? No, I think we are done there. Well, that seems like a good place sort of to wrap up. From my experience of hosting these events, if you keep people from their networking break for too long, you have a riot on their hands because everyone needs their coffee. So a big thank you to our panel, and we'll be back from this networking break at the top of the hour.